Hello and welcome everyone into today's Q&A session where I'm going to be taking every single question you guys have related to trading, related to any trading strategy out there, or if you have any questions mainly on the strategy that I teach, which is PSS model, liquidity sweep, and you know, uh, you know, plot more than that. So now you can drop your questions in the chat. So I will answer all the questions one by one because I'm expecting a lot of questions because I gave you guys homework almost a week ago to watch all the videos on my strat. So I'm expecting you guys to ask some nice genuine questions about the strategy, and I'm probably going to spend an hour to answer all your questions. Expecting most of the questions to be the same. The answers most likely going to be the same. Again, related to trading, anything you have. Position management, risk management, position sizing, or anything anything you can think of related to trading. Just drop your question in the chat, and then I'll happy to answer every single one of you. Any suggestion on building account with a little buying power is appreciated. Lost big account in last few years. Thanks, and have safe flight back. I don't know your account size for now, so let's just assume you have $2,000 account, and if I have a small account, let's say $2,000, and if I want to build it back on my $2,000 account, 4,000 to 6,000. Since we trade options and we leverage it, we can do it pretty easily. But first, what we have to do is we have to take trades which are the setups that which are we that comes rare, one or two setups a day, and then stick to the higher time frames, and say no to swings. The thing is, once this is the first thing that I want to focus into. If you have a small account, never swing anything overnight. The thing is, let's say if you have a small account, $2,000 or $1,000 account, and then you swing something for $100 or $200 per contract, and and most of the time, market opens flat on the day, and your swings probably going to open flat too, and it's going to be down 15, 20, or 30%, and then you are starting the day with a negative balance, and you're going to cut it right away. Maybe it can go in your favor, but first you have to see the negative most of the time on your swings. That's going to kind of going to mess up your a day already if you're red on the day, on the start. So a start fresh every single day, and once you build your account, once you have some profits to play with, then you can look into swings here and there. So for with 2000, let's say if I am getting into a spy trade and I'm alerting is zero DTE options play, and the max size on my this account, I would probably go with max like 10% of my account. So I know I can take 10 trades on this account. It doesn't mean of if I'm risking 10% of my account, my risk is still 10%. My risk could be 20% or 30% of that the position that I'm risking. So one contract on zero DTE is I always get around $1, which is like $100 or max 120. That's my average. I get it. I always get 2 to 3 points out of the money. Cons, based on the target that I have for that particular day. All right. So let me just write right here. No swing trades and 10% position sizing, right? And then maybe risk 20 to 50%, right, of that position size. So 2/3 of the money, depending on my target, I choose that target, I choose as a strike, and then how do I manage this position if I have one, or especially let's say you only have one contract, then you don't have to hold your contract 200% or 200%. You can you should start taking profits at 30% minimum. Once you hit 30%, take profits. Now if you put $100 in there, you are up $30 on the day, which I think is a pretty good growth for a small account. And in the next trade, I'm taking another 30-40% trade, and I'm going to be up 40-50 bucks on the day, which is good enough on an account like or 2K. And if you repeat that process, let's say 5 times, and in just a week, your account is gonna be at a 3,000, which is a 50% in just a matter of week, or even in just 2 weeks. But for that, you have to be patient. You cannot jump into any trade out there. You have to be pretty selective. If, let's say, you are still learning on, if you're a small account, and then you're still learning how to trade, what which strategy are you going to use, then you are in the premium group for a reason. I always give you guys a game plan, what about to happen, what can happen, and you can build your strategy around that for the day, that if I want to go short, if you want to go long, and risk your uh, or trade based on the market roadmap, or right. So let's say on the day, this is his pie chart, right? I'm watching, and then I told you guys, okay, this is the setup that I'm watching. Even if, let's say, I'm not taking it, like, this is setup I'm watching. I'm watching this liquidity sweep, guys, and as long as price is staying below this level, I'm gonna go short with a target of this lows right here. So I give you guys a clear setup, and I give you guys why it can work out. Then all you have to do is execute, and all you have to do is just wait for that setup to appear, and then pull the trigger. What most people do on a small account is this: they don't wait for a setup to appear, and then they just take early entry, and then they take the loss. Most of the people that I encounter with in my DMs is, they're like, okay, bulls, we're taking your trades, we're in profit. The moment, the moment I start trading my own, I started losing money, and then I blow my account back to back. And then the only one reason is stick to one strat. If you have a small account, stick to one strat, right? This is what I did, and this is what which made me profitable. I told, most of you probably know this. Lost 6 figures, back to zero, and then I started my account again from 5K. Now I'm here, right? So this is something that this is the one major change that I did. If when I had a small account, I only stick to one strategy, which was this liquidity sweeps, fake outs, and in a combination with the liquidity pocket, price goes into liquidity pockets, and comes back. Because thing is, when you trade this kind of setup, so there are two types of setups in the market, and if you're a new trader, you probably trade this kind of setups, which is market is consolidating in a range, and then you're waiting for a breakout to happen, and then you enter on the retest. And then this is where this is, I would say, one of the most easiest strat out there that anybody can teach. But the thing is, this strat, it does not work. I would say 70 to 80% of the time, this thing does not work, because every single one is looking at this strat, and it's easy to follow. And then what are the chances that it's going to work out? Is not going to work out. Breakout trades really work out, especially on the retest. Right? If you're just anticipating a quick breakout of this, you can quickly scalp it, but you cannot catch the big move on the retest. So where do you want to get it? You always want to get in near the lows where the move is started. And then how you going to identify where the move is going to start? You're going to learn how to identify liquidity sweeps, and which is pretty easy to follow. Price breaks below a swing low, closes back above, and then there's a change in structure. Price pulls back into the high value zone or not. As long as the structure is confirmed, this is where you're going to end, right? So let's say this is the breakout level. This is the breakout level, right? But you need to enter here with a very little to no risk. This is your risk. You cannot be entering on this breakout, that you cannot be entering on this breakout and expecting to catch another leg higher, when you can actually catch this move right at the bottom with a very low risk. The reason that I'm telling you this, if you're a small account, you can probably risk only 20% in this move right here. But if you are risking on that retest, you cannot be like, okay, if candle closes back below this range, I'm gonna get stopped out. That's not how market works. You have to wait for a price to make a new swing low, breaking below this prior swing lows to get stopped out, which is definitely sometimes going to be 50%, 70%, right? You don't know the risk level in here. But when you trade this liquidity sweep, I would say 80 to 90% of the time, your risk is going to be 5 times less than your reward. Uh, once you start understanding how market moves, with the liquidity sweeps and you have small account, it'd be very, very easy to grow. And here and there, you can increase your position size, to from 10%, to 15%, to 20%. Again, you don't have to risk that 20% full size. You can only risk that 20% the position size in your trade. So stick to one strat. You don't have to, change your strat. Okay, today I'm looking at breakout trades on SPY, and then and then later in the day I'm looking at sweeps, right? So stick to one strat. Just look for that one particular setup. If that setup is not appearing, you're not trading for that particular day. Simple and easy, very easy to follow rules. But again, you have to be patient. You have to be very patient if you want to grow your small account. You cannot go from 2K to 4K next day and 5K or 6K that in a week. You have to build it slowly. The thing is, small gains, they do add up. When I had started again, with my 5K account, it dipped back to, I think, 3K or so, and then I started building back above. I started taking $100 profits, $70 profits, $150 profits, and then in a month or two, my account went back to 10K, and I didn't even know that how fast that went to 10K. Within a month or two, and then then it was just off to races after that. Once things started to click, because I was only using one single strategy for every single trade that I was taking. Right. So these are three things that you definitely need to follow, and then the patience is definitely the main one. And if you don't know how to trade yet, or you don't have a strategy, and this is something that you definitely need to work on. Have a strat, right? Simple. And if you don't have a strat, learn the PSS model. I'm not hiding anything from you guys. You guys see me trade live every single day, and then I post my trade recaps too in there. Study all those charts, study the alerts. The one thing that, if you're in a premium, the one thing that you can do is, the moment that I alert, you can I always screenshot my positions. The moment I alert, and I always give the risk level. Go back, once the day ends, go back and see why did I alert it at that particular time, and then why I told you this is the risk level for my trade. Most of the time, my risk level is not more than 1 point on SPY, because I'm always catching tops, I'm always catching bottom, using this PSS model strat that I teach you guys, right? Once you start doing that, by end of the day, and then you'll be shocked to see, on every single setup, guys, every single setup from past 5 years, I've been using the same strat. And then it's definitely kind of boring, but you have to be patient for that setup to appear. And then once you build that patience, then it's just a second nature for you guys to wait, identify that setup, and then take that every single day. So do that one thing if you want to shorten your learning curve, for sure, 100%. Right? So study the alerts. Any small account tips? I'll probably give more tips on that. And then the position sizing. I did talk about position sizing, how you can grow your account slowly in my last account, in my last video, which I think was an hour and a half long. Where uh, if you have let's say, and then have one consistent position size, that is also one very important. Just remember it. That have consistent position sizing. You cannot go like, okay, this is now I'm gonna have I'm gonna buy two contracts, and in the next trade I take, I'm gonna take only one contract. You cannot do that. You have to have same position sizing, because let's say you take the first trade, and then you lost on the first trade, right? And then you're down, let's say you got two contracts, and then you down 100 on the day with the minus 50% stop loss. And then the next trade, and now you're scared to enter again, and but the moment you enter the second time, and then now your position sizing is kind of messed up. You only entering with one contract, and then now you're hitting 50% profit. But with the second trade, even if you're hitting 50% profit, you're still going to be end negative on the day, which is why have a consistent position sizing is very important. Even if you have a loss day, you can turn it into a profit day with a good position sizing, not in just one day but over the over the course of multiple trades, in a week or in a month. And if you and one more thing, and how you can protect your profits is on the day is protect your profits. The way I see it is, this is I had the same mistake. I was doing it back then. Is whenever I had profits on the day, let's say I was, even if a small account 2,000, and then I made $200 on the day or $100 on the day. In the back of my head, I was like, the next lotto I'm definitely going to get into. If a bulls alerts a lotto, or if I see a 20 or $30 lotto, I'm going to get into. Or I have $200 profit, I can risk it overnight. That you just cannot do. Just don't even think about it, right? Only take high quality setups, no lotos, or do not think it as, if it's your profits, you can risk it. Even if it's your profits, it's the real money, you just cannot risk it. You are in no position to risk that profits, because you can just always come back tomorrow and then make that again $200, and then be done with the day. Don't have that mindset. If you have profits, you can risk your profits. You just cannot do that unless you have account more than 10K. Then I would advise you to get into just get into lotos, or just loto swings in general. And if you have a profit on the day, on your first trade, you have a small account. On the first trade, you got into it, two contracts, and you made $200 or $150 or 100, whatever amount of money you made. The second thing you're going to do, and you want to get into another trade and using the same exact setup. At that point, my ultimate goal is to protect my profits, even though I see a good setup on the day. And at that point, I will lower my position sizing from 2 to 1, because my goal is to protect my profits, and then also when I'm able to take high quality setups at the same time. So even though, let's say, that high quality setup turned out to be red, then I don't want to be I don't want to be in a drawdown, or in a red by end of the day. Or like, okay, I was green on the day, I took another trade, it was a good setup, but I ended red on the day because because I my position sizing was the same, and then I took the a bigger loss than the profit I took. So this is something that you need to work on your position sizing. If you profit, cut down your sizing as you go on with day. And then for the first loss, and if you're taking second trade, I'm going to be having the same position sizing. And if I'm getting the second loss, I'm done for the day. I'm not taking third trade. I'm not taking load. I'm not taking swing. Then I'm coming back fresh next day to trade. If a small account, I lost two trade, that means I lost almost $200 or $100 at least minimum on the day. Then I don't want to risk any more on the day, because I know it's either my strategy is not working today, or I'm not emotionally stable on that particular day, or I'm not able to reading the market correct. So I'm gonna go for a walk, freshen up. I'm gonna come back tomorrow and hit a banger. So this is a mindset that you need. These are some of the rules that you need to follow. It's not like, right. So it's pretty easy to follow, guys. This is, it's not like I'm just telling this. I literally experience these things on my own. That's why I'm telling you. I grew my account from nothing to big. You guys been seeing it for long enough now. Right. So moving on to the next one is, can you please go over how to set about stop losses on your alerts? How do we find the high or low of the day? Does that mean the high and low of the day of the pre-market, including or during the market hours only? Thanks. So most of the time, what I do is, um, I always have the ES chart open. I don't use a SPY pre market, or extended hours. Basically, I always have ES chart open on the side with SPY, right? So let's say on SPY, if I'm telling you guys on the day as the market open, I'm on 5-minute chart. Your stop loss always should be at swing highs or low, no matter what the time frame you're trading. Let me tell you a little bit of basics on that, how to set your stop loss or how to risk on your trades, right? Because most people, if you don't have a risk, a setup already, but before getting into a trade, then most likely you're gonna be, that trade is definitely gonna be losing one. So let's say this is the swing highs and swing lows. Where's my chart? So this is the swing highs. This is the prices making, something like this, right? And there was a sweep somewhere around that, right? So now I know that I was looking at this level. I know there's a liquidity right here. Market wants to go here. And then instead of taking early entry as price approaching this level, what I'm going to do is I'm going to wait for a sweep. I'm not expecting it. I'm just going to wait for it to happen, and then I'm going to get into a trade. What most people do is they see that on liquidity level swing highs, as soon as price sweeps above and candle closes back below, they enter right away. This is not the confirmation that you want to look for, because even at this point, your risk is still this recent swing highs, this prior swing highs that is above that, right? So as long as his price is below this level, if even if this liquidity sweep happens, your stop loss is still this prior swing highs, so which is still I believe is gonna be big enough. So how you wanna manage your risk is, on most of my alerts, is most of the time, not most of the time, but all the time, this is my strat. I see a sweep and candle and candle closing back below, then we see a push higher, and then we see the market breaking structure. So since we're in a downtrend, so I'm gonna give you these examples of a short, but if you want to trade long, it's the exact same setup. Now at this point, price gave us the confirmation that it wants to go lower. This was a clear uptrend right here. Now it's the first time after liquidity sweep, price made a lower lows and lower highs, a clear structure breakpoint. At this point, I know as long as bears are holding this level, this highs, or if you can risk more, this highs, but there's no point, right? But if price breaks above this level again, which means that now price breaks above price swing highs, now this low becomes a protected low, and the bull's gonna move higher. So if price staying below this level, I'm gonna target this level, this liquidity level as my target, and I'm gonna risk this. My risk is going to be very small on this, and if price breaks above, I'm gonna be out, which is most likely going to be 20% or 30% to the max on my 0 dates, because I always like to enter right at the top. And then once you let me give you a quick example on, I think, on Friday, the trade that I took, I think I took three longs on Friday. Even the market was down 6.5% on the day. I took three longs right here. I sniped bottom on every single one of it with a very little to no risk, using this exact same strat. And then let me show you how I did that. Again, guys, time frame does not matter. If you have if you're a small account, stay away from 1 minute. 5 minutes is a minimum that you want to use to have confirmation of liquidity sweeps or a structure breakpoint, lower lows and lower highs, all that kind of stuff. Right? Stay away from 1 minute. So on this chart right here, as soon as this was price made this swing lows and price broke above this swing highs right here, this was my confirmation to go long, because this was the swing highs. If you see, let me zoom in a little bit more. Nice. Lower lows, lower highs, lower lows, and lower highs and lower lows, right? So now I know this is a lower high. As long as bears are protecting this high, price can go down. But what happened? Bulls were able to push the price higher, candle closing above it, or breaching above that swing high, meaning now this becomes a protected low. If this is my protected low, which means this is going to be my stop loss. If I take any long trade, this is going to be my stop loss, and my target is going to be the next level of liquidity, which is definitely going to be this swing highs right here, which is a internal range liquidity. I explained this concept in well detail in my last video. If you have any questions, guys, any questions on my strat, just go watch the video, make notes. I'm telling you, you do not need to watch any other video. Just 1.5 hour long. I explained liquidity sweep. I explained liquidity pockets. I explained risk management. I explained position size management. I explained internal range liquidity, external range liquidity, manipulation wicks. Or and how to set a bias on that particular day using daily charts and all that things, right? What's the protected low? Protected low is means, let's say, if I'm saying now this is a protected low for the bulls, that means this is a strong low which broke above the prior swing highs now, which means there are a lot of buyers in this low. The buyers need to protect this low if they want to push the price to high to this level. So now you see my risk is pretty low on this candle, just one candle risk, and my target is this next level up here. And if I measure the move, right, my internal range, my risk is only that is definitely a big day. The market is moving a lot, but only 2 point risk and I caught almost 4 points, even more than that, which was, definitely sold more than, I think it went 200% or so, right? So 2 points, and I got like 6 points or eight, more than that. I think it was a 9 points. Yes, it was a 9 point trade on that, but my risk was very small on this one. So this is something that you always want to look for when you're trading. And then let me give you one more example on how I did that using this exact strat on the day. And this is also went 200%. So this was the prior swing highs, right? Swing highs, lower lows, lower lows, lower highs. This was the lower highs, and then price broke above it. That's on the confirmation. Now this becomes a protected low, and what's the market gonna do? Market is going to go right to this level right here. If you missed your entry here, market came back. Market came back into the high value zone. Market came to high value zone 61.8%. Also a bullish liquidity pocket right here, right? So now this is protected low. Price pulls back into the zone. This is what I'm risking. Boom, massive move high, right? So and then I think end of the day, this is the move that I also caught. Right? Exact same strat. Prior swing highs broke. Now this becomes a protected low. That becomes my risk. Price pulled back. Higher highs and higher lows. Came back into the high value zone. Took my entry here. Stop loss at the lows. And then where it's gonna go? The next swing highs, right? This swing highs, and went to this liquidity pocket, and then right. Why this is swing high? Because it is swing high, right? It's just this, even this swing highs. Because now in a 1 minute, even if I go in a smaller time frame, then you can see why this was a swing high. Let me go into the 10-second. Where's 10-second? Since I took trades on a smaller time frame, I need to go into even a little more detail. So now you see, if you go on a 10-second, I don't want you to go to 10 seconds, just examples. Right. So now you see price made a swing highs right here. This was a swing high, this is swing high, swing low, right? So these are all protected highs by the bears. So that's why the price kept pushing higher as long as they were protecting it. But the moment bulls break above it, it no longer becomes a protected high. Now this becomes a protected low, and any pullback comes into this is a buy with a target of this protected high, this protected high, and this protected high, right? And as long as bulls holding this low, if they're not holding, price goes back below, I'm getting out right away. There's no reason for me to hold the trade, right? So that's how you set your risk on your own trades and on my alerts too. If you see something like this happening, and then before I get out, you should know that my alert is coming, that I'm getting out. But most of the time, we don't get stopped out because my entries are so precise, right? Easy peasy stuff. Yeah, 10 seconds. Okay, so on to the next one, guys. Even if you guys have questions on that, um, as I'm explaining, you can definitely ask. Right. The next one is, I know it's not a strategy, but I see a lot of people being successful with the opening range breakout strategy. Thoughts on this strat? Have you ever tried back tested it? I did back tested it a lot, and it does not work. Again, it's the same reason. It's not opening range. It's the same thing I told you guys. It's a breakout strat in the end. You never want to get into a trade, when it already made a move from the bottom, right? If you want to go long, let's say it's a 5 minute candle or a 15-minute breakout candle you're trading, and then you are still getting in on the breakout, that means that the move has started from somewhere from the bottom, and then you want to enter at the bottom. And then I'm gonna tell you one thing: market always moves on liquidity. That is it. Market cannot go above, or market cannot go below a certain level unless it sweeps the lows of prior swing highs or lows. Market, there has to be a liquidity sweep. Otherwise, the price just cannot move in the opposite direction. If the price does not doing that, it's in a range. It has to be, even if it's an opening range on the day, you will still find a liquidity sweep in a smaller, let's say if it's a 50-minute opening range, then you will still find some sort of liquidity sweep on a smaller time frame to actually catch that bottom or top on the day. And this is the reason exactly I do it on as soon as the market opens, 5 minutes, I see a liquidity sweep on the either side. That means the market is going to the opposite side, and then the most people get in on the opening range breakout. And what happens? Okay, here's a quick example for you guys. So this is my the opening range breakout that I indicator that I made, just to see where the highs and lows of the days are. So this is a 30-minute opening range candle. So I'm gonna plot it on the 30-minute chart. You see how many successful entries you see on this one? Barely any, right? This one trapped, breakout, came back in, breakout, came back in. This day, breakout, nothing happened, breakout, nothing happened. Right here, one, probably, move here. But if I go inside this candle, you will probably see some sort of liquidity sweep before the move to the downside. Now let's go into smaller time frame, like 1 minute. Right, look at this. Easy liquidity sweep. Price opened, and what happened? Liquidity sweep right here. Candle closed back below, broke below the swing lows. Now this becomes a protected high. Now price have to move to this low here to complete the move, right? So this is the move happened, broke below the swing lows. That is my confirmation to get into the trade. This is my risk right here. My target, this high, this lows here, and the next one, if the move continues, right? So you get the point. No breakout trades. You always want to get in early. You always want to get in before before every single one enters. You want to already be in. You want to sell to those people, those who want to get into these type of breakouts and stuff. Right, easy peasy stuff. Yes, on the 5 minutes, I can show you tons and tons of examples of 5 minute too. The exact same thing. Let me turn off this thing here. On the 5 minute chart, a lot of liquidity sweeps you can find, right? Um, right here. So price is in a range, right? Price in this range here, and then there's that manipulation wick on 5 minute. Candle close back above. That's the liquidity sweep, and candle closing back above this level right here. This is my confirmation. Now this becomes the protected low, because again, the bigger the time frame, the bigger the move is going to be. The smaller the time frame, the smaller the move is going to be. If you're trading 5 minute time frame, then that means I'm not going to look at anything comes into this candle. If I look at this candles that are just marked in here, if I go into 1 minute, there's going to be a lot of swing highs and lows in this 5 minute one big candle. But I'm not going to look into go into smaller time frame and sell if this liquidity sweep happens, right? Because I'm on a 5 minute time frame. Now I know if this is a 5 minute manipulation, the market is likely go to this swing highs, this internal range liquidity is here, and then this level here. That means I'm gonna be catching the big move right here, right? So 5 minute one example is here, and there's another one. Price made a swing lows, and there's a manipulation wick. This is the swing highs. Candle broke above it, and then this becomes the protected low, and it's going to move to the next level of liquidity. And then now you're going to say, this is the past data. No, anybody can do it. I do it live every single day. That's what I'm telling you. This thing works 100% time. Anybody can come and challenge me to trade live with them, and then I will show them that whatever I'm talking about is actually works 100% of the time. The people who are in the premium, those who know me from past 4 or 5 years, they've been seeing me doing it for all this time. So there's no doubt about it, it's not working. Right. So, and now you see this is swing highs, swept, and then candle closed above. This becomes a protected low, move high. Right. Same goes to the downside. Price made a swing highs, right? A clean 5 minute liquidity sweep. There's this swing low broke, and then that's my entry. This protected high going to this swing lows right here, right? Easy peasy setup here. And then even if we go on one again, you're gonna find it on every single time frame. It just depends which time frame you want to trade. Let's go in 1 minute time frame, and let me show you these sweeps right here. On 1 minute time frame, boom, 1 hour range. But again, if you're trading, the bigger the time frame, the bigger the reward. And guess what? The bigger the patience you have to be. Right? If you're trading 1 hour time frame, you have to probably wait couple of hourly candles to form to give you the confirmation to get into the trade. Again, if you're smaller time frame, smaller the reward, and then the smaller the patience level, or smaller the wait time is going to be. This thing that you need to get into your head, and then you can trade every time frame. Right? So on 1 hour, a clean sweep, and then massive dump in price. And next day, price opened below this prior swing lows, even this swing lows, got swept, candle closed back inside. If you go in smaller time frame, this is hourly, going to 515 or 5, that's a clear higher highs and higher lows. That's a clear structure break. And then I'm going to, this becomes my protected low, and my target is going to be this highs, right? Again, I can now look at an hourly chart and take get into 0 days, right? So if I'm getting into an hourly candle, obviously my stop loss is definitely going to be bigger. So let's say if I'm getting on this sweep on hourly, I cannot risk I cannot risk 5 points move on my 0 days. So I'm trading an hourly candle. I have to go at least 4 to 7 days out on my calls or puts. So I'll be able to digest that loss on my position, right? So bigger time frame, the bigger the time frame. Everything you go bigger, simple, right? Easy. On hourly, a lot more examples here. Price made a swing low, candle closed back above, below, and then boom, move high. Right. Very easy stuff. And this is bottom that I actually remembered recently trading live. Hourly candle closed right of open below, broke below the swing highs, and this is where I exactly told my members that the market is about to see a massive, massive dump right from 600 to this swing lows right here, which was 589, and then we caught this massive move. And then I don't think there's any single point we missed in this move. This whole move happened from top to bottom, expecting not this Friday move. I didn't enter, I was out. Um, but this whole 10% move we caught, and this move we caught, every single candle, even this small upside candles in here, you see, I caught these moves too using this exact same strategy. I have, screenshots of every trade that I took in the premium, right? So you have to be, you have to be an ultra pinpoint sniper to act on your strategy. It seems no, you don't. Again, it's a second nature that then you're gonna build, right? It's not like you are expecting a sweep, and then you just gonna wait for market to show you, and then gonna get into a trade. That's how the smart money enters into the market. Smart money just does not throw bucks at a random price levels and expecting it to go higher or lower. You have to be very careful. You have to be very conservative when it comes to your money, because you don't want to, because you do not want to risk too much money to make a lot of money. You want to risk a little risk on your positions, and then want to able to get bigger profits. That's the whole game, right? The whole game is to have a small stop loss and bigger profits, so you can catch those big moves without having that emotional side. It comes into a play. If even if can the market go up or down, if I just throw, if I get into long or short at a random level right here or here, there's no point when you can actually do that with this solid strat that I'm teaching you guys, right? You don't have to be, obviously it's not like you have to be a sniper. You're gonna become a sniper if you follow this one simple rule, right? Just wait for a sweep, wait for a lower lows and lower highs, higher highs or higher lows form, and then get into a trade. Easy peasy. There's nothing hard about it. You just need a lot of patience. That's it. Do you wait for the candle closing on 5 minutes and enter, or wait for your trace first? Since sometimes after the break of the recent swing high, it just rallies right away. How do you find a good entry on that? So there's the 2 points to that. So so this is the swing high, right? And then price breaks above this prior swing highs. Now this becomes the protected low. So the thing is, you can enter anytime as long as price breaks above this level. This is what I do. You know, as soon as price breaks above this level, I enter right away. Because thing is, this is always going to be a risk level. Even if price pulls back, that means, so let's say, my risk is too big. Now I know that I cannot afford to have, this big of a stop loss on my 0 days. Then I mostly, wait for a pullback. If I know this risk is not too big, it's a small risk, then I enter it right away. Probably going to have some little room to add if I see a pullback, right? So the whole point is to wait for the confirmation to see that if you have a protected low on the in place or not. So now protected low in place. So the and then most when you enter on the pullback, the whole point of this is to have a minimal risk on your positions. If I tell you enter on a high value zone, it's just like, I don't want you to risk this full 100% of this move, this full 100% leg up, and then I don't like to risk 100% of this full leg higher. So I want a little bit of retracement back into the high value zone if the risk is too big. And then now I know that the now, doesn't matter if price goes down here or pulls back here, my risk is, definitely going to be the same even if we pull back. So, why not I wait for a pullback to happen and then get into a trade? So this is the only reason, sometimes I enter right away and sometimes I enter on the pullback because my protected low, as long as it, is going to be the same, and, easy peasy stuff, right? This is something that, you cannot learn. I would say you just have to be, be in the market, just watch it, observe it every single day, even if you're not taking any trades. And then, slowly you're going to build that habit of, then, this is small risk, this is a high risk trade, this is where I'm going to wait on, right? And all that, different kind of stuff, easy. So price breaking above is enough. So you don't need the candle to close or confirmation. Candle, you again, let me use this lot of parts to it. Okay. So if you say that, I'm telling you get into the liquidity sweep, and then if this is the protected low and price is breaking above and candle closing back below, then you say, okay, isn't this then liquidity sweep? Right? At this point, if at this point, I would say I would still enter into the position, right? The reason is now this is the protected low is already, and then now this is the bigger trend down. Now this is the first time that its price is breaking above it, right? So now it's, it did not happen during this past, 5-10 swings higher. This has happened first time. So that means, bulls were definitely strong enough in this move higher, even though, we had a wick in here. As long as price breaks above the swing highs and pulls back, I'm going to enter right away because I know as long as price stays above this level, I'm going to go long, and then price has to move higher, right? So this is something that you need to take care of, because if the bulls were, if the bulls were not strong enough, then they wouldn't have broke above the swing highs at the first place. If let me show you this 5-minute chart here. Um, So a lot of swing highs and lows right here, right? A lot of swing highs and lows right here, but bulls couldn't even break, this. They, didn't sweep, no sweep here, no sweep here. But this is the first time that, bulls were able to break above the swing highs and then pulled back into this zone. This is where I would enter long, stops at right here, targeting internal range liquidity and prior swing highs, right? At this point. So this is something that always wanna look into. If that happened the first time, that means it's definitely something important, and bulls are definitely strong. The lows are getting protected. My risk is small. My reward is bigger. I'm gonna get in as long as I know what my risk level is. Right. Again, you're gonna learn more and more about this as you go along with the strat, and learn more on day-to-day basis, right? It's just not like you can just go tomorrow and then take a trade on this. You have to have a lot of chart time on this. One thing that you should do is just observe the market, and then observe the market on 1 minute and 5-minute time frame, and see how the market moves when you see the sweep, and you see lower lows and lower highs, and higher highs and higher lows in the uptrend, and lower lows and lower in the downtrend. And you see them market move, and then you're going to be surprised to see that every single time you see a sweep, there's a reversal right away after that. And then the time frame does not matter. And let's go on the weekly time frame. How did I know that this is a massive move going to come on NVIDIA? I told my members right at the top that a massive move is coming, and it's here already. So right here, price was making this sweep, right? Sweep higher of this candle. Candle closed back below, and we saw this massive, probably a news candle drop. Price broke below this level here. If I go on a monthly level, that was a monthly low. Candle closed back this candle week, and on the weekly, closed below, pulled back higher. Where did it go? It went back into this bearish liquidity pocket that it formed. And then the right here, I told the members that now the weekly structure and the monthly structure is changed because price broke below it. Now there is no reason to be bullish unless price breaks above the swing highs right here, because now this becomes the protected high for the Nvidia, for the bears, and then where they're going to try to push it, they're going to try to push it to the new swing lows, which is this again. This was the swing lows that was, and then boom, massive dump. And then after this, my target was this next swing lows right here, which is most likely going to target this week, right? So that only then we can see a reversal probably if candle closing back below, then we're going to go into a smaller time frame, let's say an hourly. So if on hourly time frame, if price sweep this level, candle closes back above, now this is swing high is formed, and this is going to be confirmation to go long now on Nvidia only after see that sweep, right? So the time frame definitely does not matter, or the breaking above or below does not matter, as long as price broke above it. That means in some time frame that candle definitely closed above. If even if I say 5 minute candle did not close above swing high, that means the candle did close above in a smaller time frame, like 1 minute or 2 minute time frame, right? So that means the confirmation was already there. All you have to do is just pull the trigger. Once it pulls back with the risk in place, which was the protected low or the protected highs. Hope it makes sense. I tried to explain in a simpler way possible. I hope you guys getting it. Instead of breakout, why can't we enter only in high value zone to avoid? You can definitely can. The more the filter you have, the best it is. Again, the only point to enter into high value zone is to just have a minimal risk. That's the whole point of it, right? It's not like that you have to do it. It's just you may get less trades on the day, but you still get good ones, right? So if that makes sense, right? Again, that is if that is something that you want to make part of your strat, go ahead, do it, right? Does that mean that Nvidia 1 hour sweep on the 2nd April on Nvidia that was just happened was a false signal? It broke the recent swing high, but it dumped lower after around 11. Let me see. On hourly time frame, no. On 2nd April on hourly. Oh, this one. I think the uptrend was already there. We already had a big move from since the weekly structure is bullish. I mean the bearish, the daily is bearish. I'm 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 probably gonna not look for if less even the monthly is bearish now on Nvidia when I showed you guys, right? So now all the bigger time frames are bearish. I'm not gonna look for or try to sniping the bottoms on it. Instead, I will only look for a sell setup a daily unless a daily structure changes, right? So right here on the hourly, price swept below the prior swing lows, moved higher, higher highs and higher lows, higher highs and higher lows. That was a nice trend up. That was a nice, pretty tradable move. Price went up 8%, 8 points, not a bad move. But now you see every single liquidity high is this in an internal range liquidity. Price swept above it and candle closed back below. If you go into smaller time frame, this is not bullish at all because we already making move up, prices already in uptrend. I would say on the hourly, this is not a confirmation. Your confirmation on hourly is this price broke below. Now this is the swing highs on hourly. You see now swing highs and swing lows in this candle right here. Let me go into smaller time frame to show you. Right, you see now this is the swing highs and this is swing low and you broke above. Now this is your confirmation to go long using your hourly chart with a target of this swing highs. You do not want to wait on the hourly sweep right here and then wait for this high to break to get into your long position. So this is your entry on a long positions, not this is your entry to the short position because price already made a big move to the upside, and now I wanna go for a short setups on the sweep because the macro time frames are bearish. You see swept happen on this time frame. You're not expecting it, you're not predicting it, you're waiting for market to show you that it can happen, and candle closed back below this level, which is on 5 minute. That is the hourly level for sure, but on 5 minute you wanna get a confirmation if you wanna day trade it on 5 minute. Zoom in, zoom in. This is swing lows, boom, broke below. What happened? That's the SBP confirmation structure breakpoint, protected highs. and then where it's going to go. This is next level of liquidity, massive move to the downside, and then now I go back into the hourly. What happened on the hourly time frame is another nice sweep. Where is it? Oh, it deleted that shit. Okay, right here. Nice sweep, retest of that candle, probably in high value zone from top to bottom. Boom. In the high value zone, this is my protected highs. This is my stop loss. Massive dump the next day. What's my target? This next swing lows again, right? Easy peasy stuff. And then why I did not go long here? Another good, good question that you might ask, right? So if you go on a 5 or 15-minute time frame, there was no structure break on a 15-minute time frame. Price made highs, higher lows, but couldn't break above sideways action, but instead broke below the swing highs, confirming that it can go down now. With this becomes a protected high. Boom, lows and lows and lows. Right, so that's how the market moves, guys. You always going to find some sort of liquidity on hourly time frame, or 5-minute time frame, or on 1-minute time frame to trade off, right? And then the one reason that I'm bearish on Monday that Nvidia can actually go to this level is because if you see this swing highs, it got swept on 50-minute time frame, and candle closed back below the swing lows here, confirming that now this is becomes a protected highs. Now this is their bulls bears risk. This is bulls reward here, right? So bulls bears can push it lower here, and then it can move higher, right? Or the next level of liquidity. We don't know that yet, but definitely expecting a sweep of this lows here 92 again. Makes sense. Mm. So the next again, this was pretty. I tried to explain it in every way possible, this prior question. Hope it helps, and just want you guys to learn every little bit of detail, and then just want to squeeze every information that I have on me. That's because sometimes I just in all this chaos I forgot most of the things. But if you guys ask me more and more questions, and then then I will probably be tell you even more little tips and tricks on the market and on how to read the chart. Views on gold. I'm bearish on gold now. Looking at gold, the same thing that I'm explaining you from past 30-40 minutes is looking at gold. The first time I see on the 4-hour time frame is a clean structure break here on the 4-hour time frame. After a long time, did not happen once. This is the first time I would say it's the daily structure break. That's a clean sweep on the hourly time frame, 4-hour time frame sweep, climb the close below, and now this is the close below this candle right here. That is a structure break. Again, now this is a trend confirmation. Pricing making lows and lower highs. So now this becomes our protected high. If my bad. If bears are protecting this high, that means where it can go next. It can definitely go here. This is the low that need to be swept in order to push higher, right? But I'm not gonna go long right away unless there's a structure breakpoint on 4-hour time frame. But on the daily chart, if I look at on the daily, I'm kind of bearish on it. So if this level breaks on the daily chart, which shouldn't be breaking, which is 3,000, a massive cycle level too. If this level breaks, which means it's going to be a weekly structure break, which is the prior weekly low or this week's candle high. That means once this breaks, that means we can see a weekly structure break at that point. If this happens, that means the price can go to this 2837 next. And it at this point, it definitely looking a little bit extended too. So, and the one more thing is you don't want to see market closing below this 2951 level, because this is the prior swing highs on the weekly and on the monthly time frame. If candle closing back below, that is going to be a massive weekly sweep. At that point, I'll be looking for a bigger correction in gold going around 25 to 2600. So this is something that you want to look for going forward if you want to trade short on the gold, which is definitely looking extended at that point. But again, you don't want to jump in right away. You want to wait for this stuff. I gave you guys a short-term setup. I gave you guys my long-term analysis on this too. Right. Easy. Uh, as also, if I'm following your alerts, it seems sometimes it's hard to get the same average as you. So if I get in at a higher average, should I be taking profits early? The reason I cannot pay attention to the price action at work sometimes and depending on your alerts. again, most of my trades they go 100%, right? Or more, right? So it's, and sometimes I would say, 10 or 20% of the time you're not gonna get the same average as me. But let's say if I get in at $1, right, and then you are getting it for $1.10 at max. You know, 8 to 10% is definitely fine, right, at that point. Because thing is, because I'm gonna get into a trade, then I'm gonna type it, and then you're gonna get the trade, and then you're gonna look into a trade and in your broker, and then we get in. So it says, there's definitely a lot of steps. When I get into a trade, and then by the time you get in the trade, most of the time I get, take my into in 5 minute time frame. So 80% of the time, I would say all the people get in. That's why I see a lot of profit screenshots every single day. But if you, or when you cannot get in, I would say 8 to 10% mark, it's still fine, because we are option traders, and then 8 to 10% shouldn't bother us. And then if I won, you can get in at 105, 107, 110 is perfectly fine. If anything up above the 8 to 10% mark, I would definitely not chase, and then probably will wait for the pullback, or or set a limit order at 105 or even at 1, and then get back in. All right, so this is something that the rule that you can make up for yourself, to catch every single alert. And yeah, you can, again, my risk, my take profit level, it does not depend on, if on the percentage gain in general, or the same goes with my stop loss. It always depends on the levels that I use. If I'm taking profits, it's obviously going to be a swing highs, which is going to be, if I'm long the market, and then I caught the bottom, my first take profit level is going to be the internal range liquidity high. That means, the if this is the range that I'm looking at, if this is the range I'm looking at, and this is where I got into a trade, and now this is the, as price goes down, right? So this is the bottom I caught. Now this becomes the internal range liquidity. Now this is the external range liquidity, the big swing highs and lows. If I take my entry here, my first take profit level is definitely going to be this internal range liquidity high. So it doesn't matter if it's 20%. Most of the time is more than 20% or 30%. So let's say then it doesn't matter if it's 30% or 50% or 100%. I'm gonna hold on to it. Doesn't matter if my low does or my full position. I do not sell unless price sweeps above or below the first internal range liquidity highs or lows. So as soon as price breaks above it, that's my first take profit level. I'm probably gonna, most of the time I take my 1/3 of position out, and then this second turn range liquidity, becomes my second level to get out of position. This means my third one, and so on and so on, right? But if I'm trading the macro time frames, I'm in low dose, then I really don't care about this internal liquidity stuff. Then I just hold my trades for a bigger move if I'm a low dose, because I know I can afford to risk this low dose, even if I go back to even if I got stop lot at break even. Make sense? Easy peasy stuff. I disconnected. Did you mention why you only use regular trading charts? Um, it's just a swing highs and lows. I don't use extended hours. I only use, yeah, I have ES chart by my side, and I have a SPY chart by my side, and I just interconnect both with each other. If there's a big gap up or gap down on SPY, then I definitely look at ES to get into our trades. If there is no gap up or gap down in SPY, then I will just trade it. Then I will just use SPY chart. But I definitely, yeah, I never used extended hours on SPY, because I don't know, it just did not make sense to me at all. I would just rather look at ES chart, which is open almost 24/7, and then not look at extended hours, which is which only opens just a couple hours before and after the market. Just really does not make sense. Quick questions. Uh, which are the best time frames to spot liquidity? Again, it's it's no perfect time. It happens on every single time frame. 1 minute, 5 minute. Even if you tell me you want to see on a monthly time frame, I can show you that too. It's just you want to know the basics. The basics that I tell you, the process that I have, the 3 or 4 step process that I have. Wait for liquidity sweep, and then wait for the candle to close back above the range, and then wait for a structure change and then get into a trade and a possibly pull back into the high value zone too, right? So once you know the basics, then you probably never want to ask this question ever again, because once your basics is clear, you know how the market is going to move. It's just the which time frame that you are comfortable with trading. If you're trading comfortable with trading 1 minute time frame, perfectly fine. If you're not, if just if you just cannot handle a lot of ups and downs, then maybe I'll switch to 5 minute or 10 minute time frame, right? And then this is how I started. I started with 50-minute time frame at the max, right? When I had a small account, then when I grew up to back to like 20, I think 20 25k, and after 25 or 30k, I started. Then I slowly moved back to from 15 to 10 or 5 minute time frame, and then now sometimes I just get in at 1 minute or even even lower than 1 minute. It just you need to clear your basics on the liquidity. There's no best time frame. It's just every single time frame is best time frame. It just how comfortable you are holding your trades longer or a short period of time, or how much risk you want to put in every single trade based on the time frame that you're trading, and then how patient you are when you're saying if you want to only trade 50-minute time frame. If you're trading 50-minute time frame, forget about that. You're gonna get 5 trades a day. You're not gonna get 5 trades a day. You're not even gonna get 15 trades. You're not even gonna get 3 trades on the day. If you're trading 50-minute time frame, if you probably gonna get max 1 or 2 trades on the day if you're trading 15 minute, or if you're trading hourly time frame, you may even not get a trade on the day. Right. So this is something things that you need to consider or backtest a lot, and then gonna get into, okay, this is the time that I actually want to trade, right? And just watch the videos. I have a lot of videos on this particular topics, fake out, pieces model, liquidity sweeps, and all. Just go and watch in my free education and in the premium session if you're in premium, right? And then you will definitely learn a lot. And then if you still don't get it, ask it here. I'm always available in live trading. Can you show why you so bearish on AMD Tesla? Because again, there's no liquidity sweep. If you look at on the weekly time frame on AMD, massive massive breakdown here. So what's the next level of liquidity on AMD? The only reason that I'm not very bullish on AMD is look at this time frame. Who would go long here? I don't get it. If anybody, if you are following and they're saying they want to go long here, in this whole downtrend, I know some clowns, they went long in this whole downtrend, thinking the bottom is in, but that's not how the market works. The market only works with the liquidity. If there's no liquidity sweep, if there's no structural break, the market is just not going to reverse. It does not matter the time frame you're trading. And you look at the weekly time frame, lower highs, lower highs, lower highs. Show me once when price breaks versus prior swing highs. This swing highs, this swing highs, this swing highs, right here, right here, right here. Not even once price broke both swing highs and this too. So there's no reason for me to be no, for me to be bullish on AMD when I do not even see a clear bullish structure break on the bigger time frames, on the macro time frames, on the weekly or on the monthly time frames. But instead, I'm bearish because I know that's how the price moves. Price moves from one liquid level to another, and if it goes right down here, and it's going down, and there is no change in structure, the market is going to next wave. This is the next level, and market is not reversing and not showing signs of life, not showing signs of structure break at this point. Where it's going to go next? It's going to go right next here. This is the next liquidity level. Boom. And this is the target that I had for months. Right from here, I gave you guys target right here when it broke at 140. I've told you, and AMD is going below 100, possibly 80, and even below that. And look where the market is at. I did not even change my structure. Just probably going to see me on Twitter, talking about it back to back, and it's here 70. Oh, it's below. It's 70, 84. Okay, 70, almost 70, right? And then where's going to go next? It's definitely going to go right here. This is the next liquidity level, which is 81. So if bulls want to reverse, this is a level. So, and even if this level breaks, I want to see something, a break above swing highs, this, or a clear something like this. And here, only then I can turn bullish on AMD. Same goes with this trash Tesla, right? Look at this. Tell me once in this downtrend, this thing broke above prior swing highs, or even on the daily chart, right? Right here, this daily chart, swing highs, swing highs, swing highs, swing highs. This massive downtrend, swing highs, swing highs. This is a correction, wave for correction. And then now It's going to go down again. Why? Look at the daily chart. Higher highs and higher lows, higher highs and higher lows. But what happened just now? Price broke below this price swing low and candle closed back below it. And on the weekly, there's another weekly structure break here on the weekly. Now this becomes a protected high for the bears. So as long as bears are protecting this high, I'm definitely expecting a test of 218 and a possibly test of 211. And my ultimate target is 200 on this snake, right? So this is the only reason that I'm bearish on AMD and Tesla, because there is no signs of life. So there's no reason for me to predict when this thing is going to bounce. If anything, if anyone on Twitter you see predicting, they just clowns. They don't know what they're doing. They have no idea of trading. They're definitely not profitable. I can guarantee you that. So now let's say if I wanna go on, if I wanna buy Tesla at this point, I would not buy it. The same if I'm holding it for long term, definitely just buy at any point. Simple, right? But if I'm trading it, then I want to see a break of this swing highs, because now this is the protected highs. So if price, this week breaks above the swing highs, 294, at that point, then that would be counted as a structure break on the higher time frames. At that point, I would not look for bearish time frames at all. Bearish setups at all. I would only look for bullish setup, because I know that weekly is now bullish. It breaks above that price swing highs. And as long as this price is holding this lows here, this becomes a protected low for the bulls. That means now it can push back to where the next level of liquidity, which is at 364. Only then I will give you, this kind of big targets on Tesla once I see what is happening on the chart. I'm just not gonna, throw you random numbers at random levels. Okay, just because price is down, I don't know how much, like 50% of the highs, more than 50% of the highs, and it should just bounce. Now the market just does not work this way. It just does not work this way. Look at Meta, right? Let me show you the weekly time frame, one example, and then I'll take more questions, guys. Right here on the weekly, massive breakdown right here, kept going down, went down 80% from the highs. You know, Probably many got fucked, buying this, right? And then where did it go? COVID low sweep. And then this is 2018 trade war sweep. Once it swept this low, only after this low swept, price formed this bullish liquidity on the weekly time frame. First time price broke above the swing highs on the weekly, made a higher highs and higher lows, and this becomes the protected low for the bears. And where's gonna for the bulls, where's gonna go? Next level of liquidity, from massive 123 to massive 190 move, and it just did not stop there. Another high break right here. This becomes another protected low for the bulls, and where's going to go next? This is external range liquidity, and then boom, it went there again. And then right again, we saw another higher highs and higher lows on the weekly. Now this low becomes a protected low again, and where's going to go next? This is the range right here. It went to the dot, right? So that's how the market moves. Even if you want to snipe the tops and bottoms on even on big names like this, just wait for the structure break to happen, and then you're just going to make a lot of money, just like we do every single day. So just to make sure, understand, it's on Tesla daily. Yes, it's on Tesla daily, right? Again, understand the basics. Understand the basics. Go and watch the videos, write some notes, and then you will know what I'm talking about. Just not going to learn in one day. Come on, guys, throw me some more questions, please. Do you see 5 minute liquidity grab and then go into 1 minute for pieces model entry? um most it just I use mixed time frame, right? Nowadays, it's been, I think, almost more than a year. I've been only using 1 minute and then 5 minute combinations, right? So on 5 minute, if I see a liquidity sweep happened right here, and then I'm probably going to go into smaller time frame, just like you asked, on 1 minute, to get my entry. If I'm not sure that the price should reverse in a smaller time frame, then I just stick to 5 minute time frame, because the protected low is going to be the same, and as long as on 5 minute it happens, I get in right away, right? But if you one more thing is if you look at any external because the big moves always comes on a sweep of external range liquidity, highs or lows. So this is the external range liquidity highs and lows. So anything is in between is a internal range liquidity, right? So the big move is always going to come on external range liquidity if you want to catch the big moves, right? Even if it's on 5 minute time frame, on 5 minute time frame, you're going to find the same setups, right? So on the 5 minute time frames, and then you're going to find the external range liquidity high. Let me show you a 5 minute time frame on SPY. Right. So on the 5 minute time frame, I see what's a recent example. So now on 5 minute time frame, this is the internal range. This is liquidity, right? So this is becomes the external range liquidity. Anything happens inside this range is internal range liquidity. So how you gonna trade this? So most of the time, the big moves always gonna come on a sweep of external range liquidity or on external range low liquidity. And then once you understand this, is then you just then this high, is then this swing high is going to be the same swing high in every single time frame. On 5 minute time frame, this external liquidity high is you're going to see the same swing high on 5 minute. You're going to see the same swing high on probably hourly time frame. Then you're going to see the same swing high in the 1 minute time frame. Then it all comes down to the confirmation that you're looking for in what time frame, and the entry that you're looking for in what time frame. So if I'm this is external range liquidity on the 5 minute time frame and external liquidity on a low on the 5 minute time frame. Then okay, do I want to wait for because if I'm only trading one time frame, do I want to wait for a 5 minute candle to close back below, or do I want to wait for a 1 minute candle to close back below this range and then going to get into a trade on that structural break? Or do I want to wait for 5 minute candle to close below and then going to wait for a 5 minute structural break point and then going to get into a trade, right? Then it all comes down to how you want to take your entry, or how you prefer and all that. But once you identify this, then all swing highs, external range swing highs and external range swing lows, it's the same level on almost every smaller time frame. It all comes down to how you want to take your entry. Make sense? Mhm. Come on, guys. I want you guys to ask more questions. I know most of you, probably have the same thing that I explained today, and then I think I did cover a lot of topics. The questions are probably going to be the same. The answers are probably going to be the same. It's just understanding of your understanding how this market structure works, or how to just take a best entries in general. Go ahead and watch these couple videos that I have. I'm probably gonna be start making the videos again once I'm back in my office next week. I'm probably gonna be throwing every week of one video on YouTube explaining my trades and all that stuff, and just the basic market tips and tricks. Can you show one or two more examples how you decide whether to go long and short? As on Friday, even though we were on a massive downtrend, you took long positions. I'm going to quickly explain why. Again, I'm going to say simple thing. I was on 1 minute time frame. So you need to understand this. One thing is, if bears are strong enough, they will protect the swing highs every single time you see a pump. Every single time we see a pump, this move will not break above the swing highs. So that means we're in a clear downtrend. The moment it breaks above, that means there's a clear sweep. That means this low that it formed earlier, right now, candle closing back above. If you look into any chart, this swing low never gets breached. Never gets breached. Sometimes you get breached, but this swing high will never get breached. And so you want to see these two things. This low, rarely get breached if a price in a strong downtrend. The moment it happens, now this is your alert. Now you should be on high alert that the price can actually reverse from here, but you don't have the confirmations yet, right? And then candle closing above this swing highs, and then structure break point. This is a protected low. This is where I'm going to take my entry, and then we're targeting this internal range liquidity high, this, and this, right? Easy stuff. So now let's go into the actual examples, how I sniped that bottom. Right here, you see price, a nice long, right? This one too, but I caught this one. So price was making lows. You see, price is making lower lows and lower highs, lower lows, lower highs, lower highs. You see, every single time prices are making lows and lower highs, it never broke above prior swing highs, right? Never broke above it. So bears protected this highs every single time. So now here, so that was a nice move. Right? So, but now we got the structure break right here. So this move is not valid. So now at this point, we saw a sweep of this candle right here. So the candle closed above this level. So this was my confirmation that this is the first time that sweep is happening on the day, on the 5 minute. And this is the swing high that I was watching, this swing highs, and candle was breaking above it too. It was almost broke. And then I alerted you guys right away that this is my stop and I'm targeting this swing highs right here. So this is where or if I go on a 5 minute time frame, right? Yes, just the structure break. Again, fibs I only use if the move is too extended from the protected low or the high, then I wait for price to pull back into the fibs to get the entry to get my risk lower. That is it. Right? So if I go on a 5 minute time frame, you see on a 5 minute time frame, that was a clean 5 minute sweep too, because you see the thing that I told you, external range liquidity. So now this is the external range liquidity high. Now this is low of the day. This becomes external range liquidity. Now, even if you go on a 5 minute, you're gonna find the same lows. You go on a 50 minute time frame, you're gonna find the same lows. You go on a 30 minute time frame, you're gonna find the same lows. Even on 1 minute, you're gonna find the same exact lows. The only thing that's gonna change is internal range liquidity, highs and lows. So this becomes my target on 5 minute time frame. Because on the 5 minute time frame, I saw a sweep, price breaking above the swing highs, candle closing above, and this becomes a practical low. Price have to move here to the internal liquidity high if it wants to reverse. If doesn't want to reverse, then it moves to the next level of internal range liquidity before reversing lower, or if you want to go to this external range liquidity high, right? So now where would I stop out on this 1 minute time frame, right? So now you guys saw I sniped the bottom, caught this massive 9 points move on SPY, but when would I stop out? And you have two options. First is you wait for price to break below this lows and get a stop loss. Or if you're already in profit, price is breaking above, you're in nice profit, 10, 20, 30% in profit. At that point, if price makes another structure break on the 1 minute time frame, something like this right here, then I would get out right away. Then I would not use this level because I know the price is going to go there anyway now, because there's no point, because now price confirmed that it swept this internal range liquidity high. And now after swept this internal range liquidity, price made a lower lows and lower highs. So at that point, I don't want to stay long anymore because I know the structures break. Now my risk level is now going to shift from here to here, right? Lower lows and lower highs. No point of me holding because now price change that trend. The next move is definitely expecting another lows and lower highs. So that hope, I don't want to stay in a trade if I'm in a hope position now. So a quick example on the day, same right here. Liquidity sweep off the bottom right here. Price moved higher. This is a swing highs. Price moved above it, and pretty nice move. I think anybody would go long. I would go long too right here, but I would cut it right away with a very small stop loss because price broke below the swing highs, swing lows right here. If we saw this internal range liquidity high, breaking above it, very bullish setup. I would definitely take it. Maybe I was busy, I didn't take it. If I saw it, I would definitely take it. But I would have also cut it very sharply because price moved below the swing lows, confirming a lower lows and lower highs, confirming a change in trend. At that point, I don't need to hold it to the low of the day. There's no point because I know it's just going to go there now because price, the structures change, liquidity sweeps there. So if I want to go long again, I want to see a sweep of this lows again, and then break above this swing highs, and then get into a trade and all that stuff, right? Makes sense. And the next setup that I think this is the next end of the day trade that I took, exact same setup is swing lows, sweep, candle closed above, and then boom. Below this candle lows protected, took my entry, massive move caught. I think it's a 200% or something. Right. Can we use ORB with 15-minute? I'm not getting clarity with the liquidity sweep to enter when break. Just just go on the liquidity sweep video that I made. Then will definitely make sense. Again, you can trade any strategy out there, right? It's just I'm not telling you that this is the best strat, ORB is not the best. It's just I'm telling you you want to enter into the market where the move begins, right? You don't want to enter into the market where the move can finish, right? So this is the opening range or any range, right? Any range, prices sideways consolidation, and it's breaking out, and then this is you don't want to enter here. Simple, right? You already missed this leg higher. You want to enter at the bottom because at the bottom you will always find some sort of liquidity sweep on 1 minute, 5 minute time frame because your risk is definitely going to be lower here. The reason that I'm saying is this. Now this is a swing high. If price is breaking out, of a range or anything, that means it is breaking out of some sort of external range liquidity highs, right? And then there's always a risk when you are trading external range liquidity highs or external range liquidity lows with the continuation setups, is there's always a risk of another sweep, right? There's a risk of you don't know that this is the liquidity grab is happening at external range liquidity high or swing highs or opening range highs. We're expecting a retest on the end, you getting into a trade. This might be a move that is, mostly what you see on opening range breakout too. I can show you examples is price moves above the opening range, candle close back below, and then you see the massive move comes to the opposite side. So you want to get trapped into into the in the market, trading breakout, thinking it's a breakout, but it's actually a fake out because that's the external range liquidity sweep, external range liquidity sweep, right? So this is my whole thinking behind it, not trading it, because I've seen it happening most of the time. There are more fakeouts in the market, then there are more successful breakouts in the market. If you identify it quickly, then there are more successful breakouts, right? If there is a successful breakout in the market, then everybody would make easy money, and then the market is not a place where you make easy money. This is a place where you make smart money with the easy methods that I tell you, right? If everybody start taking ORB, then I would say 100% of the trader would be rich by tomorrow. But that's just not how the market moves. Market likes to trap those traders, those who knows what the market is going to do, those who likes to think this way, that this strategy will definitely work with ORB. Everyone's looking at it. Market likes to trap those type of traders, and then market moves the opposite side, right? And then I also one thing, most people tell you that use this volume and all, volume, look for volume, and just a breakout happening, just a retest happening, now say more volume on a retest, now you should enter. If you one more, if you're looking at volume to get into a trade, you're already too late. I say this all the time. I think I said in the last class too. If you're looking at this high volume bar, right? It happened already. Let's say on a 15-minute time frame, 30-minute time frame. Let's go. Most of high you're gonna get on 15-minute. So on 15-minute, this is the high volume candle right here. Now, if you're looking at this candle after it printed, and the next move is coming, if you are getting in after this, looking at this volume, you already missed the move. Sorry to say, it's all missed move. You don't want to look at the volume and get into a trade. You want to build that volume up so the other people can look at the volume, and so you can sell them to later on that lower volume, slow and steady, right? This is where the most people are going to get trapped. So you want to make up that volume, and how you're going to make up that volume, and how you're going to help make up hedge funds make their volume higher. You're just gonna get right away sniper entries at the highs, sniper entries at the bottom, build their volume up, wait for other people to see it, and then Once they see it, you sell it to them. Easy peasy stuff, right? So that's why you don't see any volume on my chart. You don't see any indicator on my chart. If you, I don't talk about level two bullshit. I don't talk about this momentum indicators. I don't talk about Magnus crossovers. I don't talk about anything other than candlesticks. That's all you need. All you need is price action. All you need is structural break. All you need is liquidity sweeps. Then you will be get ahead of the 99.9% of the market if you just start doing what I tell you today. Simple. And then if you follow all these methods correctly, I can guarantee you that in 6 months your whole perspective of looking at the markets, creating good setups, will all be changed in just 6 months if you just follow these tips. If you just follow this, follow things that I tell you right now, because this is something that is coming from a experienced trader that has been trading for almost 6 to 7 years. I've been trading full time for 5 years, and I'm trading live from 5 years every single day. And my every single trade, is journal. It's not like I type I'm going long here. No, I always give my screenshot so you guys know I'm in a trade. So when I exit, I send a screenshots right away, so you guys know that I actually held on to that trade, even if it goes to 50%, even if it goes to 500%, even if it goes to minus 50. I send a screenshot of that too, so this thing actually works. So this is coming from someone who is a successful doing this back and forth every single day multiple times from years and years. So you can definitely have some trust on what I'm saying, right? Because I have so much trust in my strat. So I'm just telling you straight, 6 months, give it a time. If you want become a profitable trader, then you can just change my name from Big Bull to anything that you wanna, like, simple. Like, any more questions, let me know. How do you decide it's a choppy day and not worth trading if price in stays staying in that external range and external range low liquidity on the high and low of the day? So let's say price pushed higher on the day, and then quickly, now this is the low of the day, this becomes the high of the day, price pushed lower, and then it's not going anywhere after that. At this point, now it becomes clear, this is the highs, this is the lows, swing highs, swing lows, external range, liquidity, external range box formed. So now, as long as price is trading in this range, I'm not trading, right? I want to see a sweep of external range liquidity highs, either to the downside or to the upside before getting into any trade. Unless I don't see this kind of setup, that means it's most likely going to be a chop day. You're going to go ahead and then watch all the chop days, and you're going to find this exact same thing where price made a swing highs and price made a swing lows on the day, and then price went sideways between that range, and then the price did not move at all day. And then on this type of days, you will not see me trade at all, right? And then I told you a simple reason how to identify a choppy day versus a trendy day. So if it's a trendy day, it will not stay in this range. It will go out of this range, in the first 30 minutes or in the first 1 hour. Simple.